Hey there, money movers! Get ready because we're talking about some huge news that just dropped in the world of live events and investing. After years of anticipation and a couple of false starts, StubHub, that name you probably know for grabbing tickets to your favorite concerts and games, has finally hit the stock market. This is a game changer. StubHub made its big debut on the New York Stock Exchange, and it opened strong. This isn't just about one company, it's a defining moment for the entire ticket resale industry. So let's break down what went down. StubHub officially went public on September 17, 2025. This means you can now buy shares in the company, which are trading under the ticker symbol Stub. They set their initial price at about $23.50 a share. With that price, they sold 34 million shares, bringing in a massive $800 million for the company. At that initial offering price, StubHub was valued at about $8.6 billion. But get this, when the stock actually started trading on the exchange, it opened even higher, at about $25.35 per share. At one point, shares were even listing at about $25.70. This opening price pushed the company's total value up to a whopping $9.3 billion right out of the gate, with shares rising about 8% on their debut. That's a powerful start. Now, for those keeping score at home, this wasn't StubHub's first attempt at going public. They actually hinted at a huge company value of $16 billion before pulling back last year. And it happened again just this past April and in July 2024 when they delayed their plans. Why the delays? Market volatility and even President Trump's tariff policies played a role in slowing things down. But they persevered, and now they're here. The company plans to use the money they raised to pay down some of their debt and to fund other general business operations. This move is all about strengthening their financial position for what's next. Let's talk about StubHub's business itself. You know them as the place to score tickets for sports, concerts, theater, and other live entertainment events. How do they make their money? Primarily by charging fees on all those transactions that happen between buyers and sellers on their platform. And they're huge. Last year alone, they moved more than 40 million tickets, connecting about 1 million sellers with buyers across more than 200 countries and territories. That's a massive global footprint. StubHub has been riding a wave, especially with the live events market making a huge comeback after the COVID lockdowns. Think about it. Massive tours like Taylor Swift's Eras Tour, Beyoncé's Renaissance Tour, and huge sporting events like the Super Bowl have been absolute gold mines for ticket platforms. People are craving live experiences, and StubHub has been there to connect them. But even with all that excitement, StubHub's financial picture is a bit of a mixed bag. Last year, in 2024, their revenue jumped by about 29 to 30%, hitting nearly $1.8 billion. That's incredible growth. However, things have slowed down a bit this year. In the first half of 2025, their revenue only saw about a 3% increase, reaching about $830 million. In the first 3 months of 2025, their revenue grew about 10% to nearly $400 million. And while they're bringing in a lot of cash, they've also been experiencing some losses. In the first 3 months of 2025, their net loss grew to about $36 million, up from about $30 million in the same period last year. For the full year 2024, their net loss was much smaller, at about $3 million. On the sales volume front, they're still moving a ton of tickets. Their gross merchandise sales, which is the total dollar value paid by ticket buyers, hit about $2.1 billion in the first quarter of this year. For all of 2024, that number was even higher, at about $8.7 billion. So the volume is there, but profitability is the big question mark for investors. What's their plan to tackle these challenges and keep growing? StubHub is looking to expand beyond just being a resale marketplace. They want to get into primary ticketing. That means selling tickets directly from artists, promoters, and venues. If they pull this off, it would completely blur the lines between where you get your first-hand tickets and where you find them on the resale market. This move would also put them in direct competition with the biggest player in the game, Ticketmaster, which is owned by Live Nation. For us fans, this could mean more choices and potentially new pricing models, but it also raises questions about how much power one platform could have over access to live events. And speaking of Ticketmaster, the entire ticketing industry, including StubHub, is under a microscope. Regulators in the U.S., both federal and state, along with consumer advocates, have been calling for greater transparency for years. They're pushing for upfront fee disclosures and limits on how much tickets can be marked up for resale. For example, Washington, D.C. actually sued StubHub last year, claiming they advertised deceptively low prices only to pile on extra fees later. StubHub is also facing pricing and fee inquiries in Pennsylvania and New York. The Federal Trade Commission, or FTC, even sent StubHub a warning letter in May telling them to comply with junk fees rules. Another hot-button issue is ticket bots. These are automated programs that snatch up tickets the moment they go on sale, only for brokers to resell them at much higher prices. Regulators are going after these bots and even probing Ticketmaster to see if they're doing enough to stop them. President Trump even signed an executive order in March specifically aimed at protecting fans from exploitative ticket scalping and reforming the live entertainment ticketing industry. It's a huge focus for policymakers, and it's clear they want to protect fans from inflated prices and shady practices. This could be great for buyers, finally getting clearer costs up front, but it definitely puts pressure on StubHub's profits. StubHub CEO Eric Baker even said that while new transparent pricing rules might hit them for about 10% initially, things usually get back to normal after that first adjustment. In Europe, regulators are even talking about capping resale prices at 20%, which would essentially put most ticket speculators out of business. Live Nation is actually supporting similar efforts right here in the US. We've also seen overall ticket prices for concerts and sporting events rising faster than inflation, up about 5% in 2024 and about 7% in 2023. StubHub isn't alone in this market. They face tough competition. Besides Ticketmaster, rivals like SeatGeek and Vivid Seats are also fighting hard for their piece of the pie. And when you look at how some of these competitors are doing, it really highlights the challenges. Take, for example, Vivid Seats. They went public back in 2021 at $10 a share, and even peaked at $97 a share in January 2025. But since then, their stock has seen a huge drop, trading recently at about $17 a share. In fact, their stock is down about 80% this year, after losing about 27% last year. That's a stark reminder of how tough this public market can be. StubHub's journey to this IPO has been a long one. It was founded way back in 2000 by Eric Baker and Jeff Fleur. Eric Baker is still the CEO and even holds a controlling share in the company. It's had a few different owners over the years. eBay bought StubHub in 2007 for about $310 million. But then in 2020, Eric Baker bought it back through his other company, Viagogo, for about $4 billion. The combined business is now what we know as StubHub Holdings. So, StubHub's public debut is happening during an exciting time for the IPO market. After a few slow years, the market is really coming alive again, seeing its best year since 2021. We've seen a flurry of tech companies go public recently, like the buy now, pay later company Klarna, the crypto firm Gemini, the design software company Figma, and the stablecoin issuer Circle. It seems like investors are hungry for new opportunities, and StubHub is now part of that story. Now, with all this happening, what's next for StubHub? The company's CEO, Eric Baker, says this IPO is just a step on their road to becoming the ultimate destination for all live events and all tickets. This is a strategic move to raise capital and reduce debt, but not everyone is jumping for joy. Experts like Kat Liu from IPO research firm are watching closely. Liu points out that with slower revenue growth and all the industry scrutiny over fees and fairness, investors are showing a more measured appetite rather than an exuberant one. So it's a cautious optimism, not a wild party on Wall Street. For fans like you and me, StubHub going public won't change the ticket buying experience overnight, but it does mark a huge turning point. StubHub isn't just a marketplace anymore. It's a public company, which means it's not only accountable to us, its users, but also to the big players on Wall Street. This adds a whole new layer of pressure and opportunity. That's all for today's market breakdown. If you found this information helpful, make sure to hit that like button. Don't forget to subscribe to the channel for more updates and click that bell icon so you never miss out on our latest videos. See you next time.